Hello everyone, welcome back to my channel. I'm your host Miss KK and this is the way. So today's episode we are looking at debt management. So if you're new here, thank you very much for stopping by. We really appreciate, and if you're already a returning subscriber, an awesome appreciation. I haven't been uploading of late because I've been out of town for a few days, and then when I got back I also had a bit of workload to catch up at work, so my schedule has been really tight, but I'm hoping to get back in the routine so that I can get back to uploading consistently. So as I was up and about, I once posted a question on my Instagram to say people could send me any question, and when I'm on the road and not driving I could attend to those questions. And one of the consistent theme that came up is debt management. People are wondering what's the best way to pay off their debt, especially on personal loans and credit cards. So I'm not going to be speaking much about home loans because home loans tend to be substantial amounts of money, and no matter what you do really, unless you have additional income to really throw and attack that loan, it won't take you a short period of time to be able to achieve that repayment faster. But for personal loans and and credit cards where the capital amount isn't that high, if you add in a little bit faster, you tend to see result a lot quicker than on big amounts. That's why for the purpose of this discussion I'm leaving out home loans completely. So the two ways that I'm going to be sharing in this video, number one, it's called paying off the smallest debt first, and number two is called paying off the highest interest debt first. So the smallest debt first really is just from an emotional and motivational perspective. It's much easier for you to commit paying off a 5,000 than it is to paying off a 15,000. So if you can commit to say by the end of this X so much month I want to be done with this 5,000, if I put in additional payment on this loan, you are likely to achieve that if your budget is constrained, then achieving a repayment of a 15,000. So it helps you to build up stamina, it helps you to build up a determination, and hopefully when you're done and you've seen the result and accomplishment of a smaller debt, you have the energy and the zeal to continue on the next debt. So to illustrate this, I have my amortization table on my computer here, and I've put in, just for argument's sake, let's say you have a loan of 7,000 at an 8% interest rate. You are paying that over a 24-month period, and you are making 12 installments a year. That means you're making an installment per month. So if you put that in an amortization schedule, it will throw you that you need to be paying about 316.59 cents a month. So if you just stick to what the bank has told you, or whoever the lender was that gave you the schedule, you will be done with that loan in month 24. But let's just say, for argument's sake, you bumped in this video 6 months into your loan, you've already made six installments on your loan, and you decided you're going to be readjusting your budget in order for you to spare up some capacity in order for you to pay over and above the 316 that you were required to pay. So for example, let's just say you went on your lunch budget and you cut off $100, meaning on one day of the week you decide to pack lunch at work instead of you going to buy lunch, and you decide you're not gonna use Super Away anymore, you're gonna downgrade to Away Prime. Then you free up a little bit for capital there, and then you maybe decide that you like shopping a lot. Over the next couple of months you're not gonna be shopping at the same budget, then you cut off another $100 there. So from those three adjustments that you've made, you've sped up $300 to be able to add on those installments. So basically you went from paying 316 to actually paying now 616, because it's the initial 316 plus this 300 that you pay. So you've basically doubled your installment. So by doubling your installment, you will be able to pay off this loan in 15 months as opposed to 24 months. And that means you would settle this loan a lot quicker than what you would have if you hadn't added an additional. And for a lot of people, we look at 316 and we think it's a small amount of money, or we look at 300 and we think it's a small amount of money. But when you add this to a black tax context, when you add this to interest rate increasing, cumulatively it starts becoming unmanageable, and you won't be able to do the things you'd like to do. So please avoid getting into clothing accounts and loan accounts just looking at the installment itself, because it might look affordable at the time of taking in, but when you look at in the near future and things change, you might actually struggle to make to keep up with this repayment. So this is the first approach of paying off the smallest debt first, and hopefully when you're done, you now take this 613 and then you add it as an additional repayment to your next loan. And when you add it as an additional repayment to your next loan, it should be pretty easy because you're already used to living off without this 316. You don't have to make other additional adjustment to your budget. Your life will just continue. That's why it becomes easier to commit, because if you're able to commit for the next 6 months, you were able, or 7 months, you were able to continue that routine if you really want to achieve the debt-free adventure that you are on. The second one is attacking the highest interest debt. The reason why this is really important is because the higher the interest rate, the more money you are essentially throwing away. So if you look at how compound interest work, the first few months, if it's a short-term loan, or the first few years, if it's a long-term loan, you are basically servicing interest and you are only paying a small portion of your capital off. So let's just take a typical example of this again, the 7,000 loan. So in month 1, you make 316 as an installment. Of that 316, 269 is basically you paying the interest that accrued for that month, and only 46 of that goes towards capital. So that means that if you're basically doing the bare minimum on your loan, it takes you a long time to attack that capital, because a big portion of your loan actually goes towards interest. But if you then add in an additional 300, if you add an additional repayment on your loan, anything above the 316 that you add actually goes towards your capital, meaning the following months when they calculate interest, they are calculating it on a lower capital. Remember how this compound interest work? It takes this month's balance and it calculates what your interest should be, and then when you make off your payment, they will take, okay, the initial capital that you have plus the interest that you've accrued minus the payment that you've made. Our new capital is this. So if you're attacking your capital faster by making additional payment, that means the following month your installment goes a lot more on capital instead of interest, and you're attacking your debt faster. I hope really that makes sense, and that's how you need to look at the two ways. So you need to decide which one are you going to follow, the cheapest debt or the smallest debt, in order for you to be able to achieve that. So again, here I just want to put it out here that it's not easy to pay off debt, especially when your budget is constrained. And the only way to really make a difference in your budget is, number one, with sometimes if you get additional income and you throw that additional income, or you readjust your existing expenses so that you'll be able to free up some capacity in order for you to be able to make an additional payment on your loan. Then let's talk a little bit about credit cards and why a lot of people struggle with credit cards. So a lot of the banks, when they see you make money, and they can easily see that because the money is deposited on your account, they monitor your activity, and now and then they actually call you to give you an offer that you qualify for a credit card. And for a lot of people, we get excited that we are eligible for credit card without really understanding that credit card is debt that is available to you 24/7, that would give you a temptation to go into that debt whenever a small emergency arises. So for example, if I were to be invited to a bridal shower and I need to give a gift and I don't have a credit card, I would need to either go into my saving and go and get that money to be able to buy that gift, or I literally just try to be realistic with myself, try and see if I can use the cash that's available to be able to make it to the bridal shower, or simply pitch up at a bridal shower without a gift because my budget is constrained. And there's no harm going to a bridal shower without a gift, because friendship is more than just gifts, okay? So whereas if you had a credit card, it's so much easier to be like, oh, it's fine, I'm going to get my friend something in Edgar's, because you can get it on the credit card. That's why I'm saying that it's money that is at your disposal that can, if not really fully aware, can get you into debt. And what people don't seem to comprehend is that you get a credit card, they tell you your limit is 10,000. That means you can spend up to 10,000 without the bank's consent, and they'll again tell you for this 10,000, if you spend it in full, you can just pay 700 off per month. But if you pay 700 off a month, the moment you pay that 700 off, that 700 becomes available for you to spend again. So what people struggle is, just as they are paying off the credit card, they pay off 3,000, then they see, okay, my limit is 10,000. I have spend 7,000, I was able to repay 3,000, and all of a sudden 3,000 becomes available. So again, they struggle to not spend this 3,000 because it's there. You can easily see that you have 3,000 for you to spend. That's why for me, if you really don't have discipline, don't get a credit card if you don't need it. There are obviously instances where you need it because it's easier and cheaper to use a credit card. For example, if you are traveling internationally, the bank charges on the credit cards tend to be a lot cheaper as opposed to debit cards. And quite frankly, for some of the local banks that don't exist in international markets, you might actually struggle to transact with your debit card. So in some instances, it's basically needed for you to survive, but in most instances, it's not. So nonetheless, assuming you already have a credit card, you already got yourself into this mess and you're trying to see what's the best way to get this credit card. So number one, the first thing I would do is call the bank to lower my limit. And obviously they might lower your limit, saying that you first have to pay off your debt and lower so that they can lower your limit, or they might actually maybe not just allow you to spend your money. I'm not really too sure which option is most common in Namibia because I don't have a credit card personally. So see if you can call the bank and ask them to lower your limit. Number two, I would just cut off the credit card. Just the mere fact that you have it, you will be tempted to spend. So I'll cut off the credit card and try and not have it, because that again just removes another temptation. Number three, I would cancel the details of that credit card of any online website that I used to buy, because online shopping is the easiest way to get yourself into debt. So if you can delete it from Amazon, delete it from Shein, delete it from WeChat, delete it from anywhere, so that you don't have the details. So if you now cut up the credit card, you don't have the credit card number and the CCV, whatever number is called at the back that allows you to purchase things online, then you don't have the temptation to actually buy. And I would just put a debit order over and above what the minimum payment is, so that I can put in additional money to try and attack this. Again, if you are living on the budget, you would need to sacrifice this money somewhere. You would need to cut some discretionary expenses to enable you to be able to afford this extra payment. And I'm sorry, but all of this comes with sacrifices. Just the same way you got yourself into the debt, it's the same way you need to go to get yourself out. And you need to be patient, because if you're trying to take shortcuts, you might actually lose more money in the process. Don't now go and try and get a loan to try and pay off this loan, because sometimes it looks easy for you to get a new loan to pay off this loan, but you don't know if the interest on that loan is actually worth you taking it and putting it on there. So over and above is be patient with yourself, be intentional, be deliberate about paying off your debt, and hopefully you come off lighter at the end of the day, or successful at the end of the day. And lastly here, I just want to say, don't give up. You will have relapse, just like a lot of people that are addicts at things, they would have relapse. But it doesn't mean that if you now paid off 3,000 of your credit card, then you put it on a charge of 500, you must now all of a sudden give up. You must just recenter, refocus, and most importantly, find an accountability partner that will help you keep accountable, to help you on this journey, because most of the time that would be probably your weakest moment, online shopping. So having a friend that checks in with you to say, hey, did you put in any charge on your credit card this week? And maybe even providing that statement to a friend to actually prove that you didn't would actually be a good idea. So whatever you have to do, just don't give up. So yeah, as I said, really a very brief video. Hope you learned a thing or two, and I hope we can get to engage and, you know, become more financial savvy and get to that point where we can make sound financial decisions. Kindly please don't forget to subscribe if you haven't done so. Share the videos with your friends and family. Until next time, it is goodbye. Cheers.